President Trump's so-called Liberation Day brings in new tariffs and economic uncertainty.
My fellow Americans, this is Liberation Day.
We take a look at what's included.
We will impose a 25% tariff on all foreign-made automobiles.
And examine Trump's claims that tariffs will revitalize American manufacturing as job cuts and fears of trade wars cause concern in America's heartland and around the world. Welcome to PBS News Weekly. I'm Lisa Desjardins. President Trump announced a new set of major global tariffs this week, 10% on all imported goods into the U.S., and he escalated trade wars with a second set of tariffs for about 60 countries. During the announcement in the White House Rose Garden, he issued tariffs in response to what he calls unfair trade practices, including a 34% tariff on China, 20% for the European Union, 24% for Japan, and 46% for Vietnam. President Trump called it a historic day, stating the tariffs would revitalize manufacturing in the U.S.
It's our declaration of economic independence. For years, hardworking American citizens were forced to sit on the sidelines as other nations got rich and powerful, much of it at our expense. Jobs and factories will come roaring back into our country, and you see it happening already. We will supercharge our domestic industrial base. We will pry open foreign markets and break down foreign trade barriers.
As part of the announcement, President Trump declared a national economic emergency, which the White House says gives him authority to impose these measures. Congress has the ability to block an emergency declaration, but House Republicans say they will not do so. The fallout of these tariffs, both at home and abroad, was swift. On Wall Street, stocks plunged moments after the opening bell, part of a global decline. Foreign markets tumbled overnight in reaction to President Trump's sweeping new tariffs. But the president this afternoon said he wasn't worried, raising the tariffs as a chance to negotiate.
I think it's going very well. The markets are going to boom, the stock is going to boom, the country is going to boom, and the rest of the world wants to see, is there any way they can make a deal?
But from another high-ranking White House advisor, a different take. Senior counselor for trade Peter Navarro told CNBC the tariffs are long-term and not going away tomorrow.
This is not a negotiation. This is not that.
This as headlines across time zones blared immediate reaction, deeply unreasonable, worse than the worst-case scenario, and warning of a global trade war. World leaders, meanwhile, blasted the Trump tariffs from Europe.
President Trump's announcement of universal tariffs on the whole world, including the European Union, is a major blow to the world economy.
To allies in Asia,
we'd requested the U.S. government review its unilateral tariffs. We are extremely disappointed and regret that they've been implemented.
To a prominent competitor.
China firmly opposes this and will take necessary measures to resolutely safeguard its legitimate interests.
This is Liberation Day.
President Trump declared a national economic emergency when he introduced the tariffs in the Rose Garden just after the markets closed yesterday, insisting time would prove him right.
Every prediction our opponents made about trade for the last 30 years has been proven totally wrong. In my first term, they said tariffs would crash the economy. Instead, we built the greatest economy in the history of the world.
The plan includes blanket tariffs of 10% on all countries that take effect Saturday, as well as what he called reciprocal tariffs, tariffs imposed in response to what Trump sees as a variety of unfair trade practices. Those would take effect next Wednesday. Some of the U.S.'s largest trading partners are on the list, including China, hit with a new 34% tariff, and the EU, hit with 20%. One of the highest tariffs listed was for Vietnam at 46%. Many retailers and brands have moved production to that country in recent years after U.S. efforts to discourage trade with China. Today, stock prices for some of those companies plunged. And some of the tariffs left economists scratching their heads. Example, those imposed on the Antarctic Heard and McDonnell Islands, which are uninhabited. Notably left off the list, two of the U.S.'s largest trading partners, Canada and Mexico. The White House says they're exempt from this round for now, but are still subject to other previous Trump tariffs. On Capitol Hill, some Republicans defended the moves.
I want more jobs in our state. I want higher wages for our workers. I want industry that's there to be protected. I want a better deal for my farmers. So if we can get that out of these tariffs, that's great. I don't care what the banks fuss about.
While Democrats universally blasted them.
It's a disaster. There's no economic intellectual foundation. This is a weird digression by Trump. That's number one. Number two, it's going to do nothing but harm to the economy.
This has left many businesses, big and small, to try to figure out the math.
The new tariffs that were imposed, I don't see how they just can't sink the entire industry.
Like this Long Island watchmaker with an online business who concluded it's not good for him, running the numbers on YouTube.
Japan is being hit with an additional 24% of total value tariff. So on $28,200, I will be hit with a tariff of $6,768.
Companies, countries, and politicians are now quickly making their own calculations. For the PBS NewsHour, I'm Lisa Desjardins.
We now turn to two perspectives on President Trump's tariffs. Jeff Bennett was joined by CNBC contributor and financial journalist Ron Insana, while Amna Nawaz spoke to Republican Senator Ron Johnson.
The Dow saw its biggest wipeout since 2020. What does that say about the capacity of businesses and investors to absorb this uncertainty?
Well, it was so outside the bounds of what was expected. Most yesterday, before the tariffs were announced, expected a worst-case scenario, a 20% across-the-board tariff, which would still be the worst-case scenario. This was worse than the worst-case scenario, with tariffs, again, against China, for instance, reaching as high as 54% and baseline tariffs at 10%. All of this really shook confidence that the economy could avoid both higher inflation and a recession down the road if these tariffs were to be persistent, and to complicate things, if other countries retaliated, it would even deepen what could be a global recession. So that the market responded swiftly, and it did so in no uncertain terms, sending a warning to the Trump administration that this idea, as it is currently constructed, is certainly not good for the economy nor for business.
Vice President Vance on Fox this morning acknowledged that this is a big change, but he said a big change is what is called for after decades of a U.S. approach that resulted in shuttered factories and manufacturing losses. President Trump says he wants to reshore American jobs. That's a worthy goal. But are sweeping tariffs the way to achieve that goal?
Well, many economists doubt it because for a couple of different reasons. Number one, no one knows how long the tariffs will be in effect. And if President Trump does not run for a third term, as he has at least joked or hinted in recent days, the next president could unwind those tariffs, and businesses could end up making very expensive investments in the United States only to have the tariffs unwound, leaving them with higher cost production in the United States than might otherwise have been. And so with these tariffs and the confusion around their implementation, it's very hard for businesses, either domestic or foreign, to make decisions that they can live with for the next several years. So it adds to the confusion. Domestic manufacturing, clearly costs more than the manufacturing of certain products overseas. And some countries quite simply will do things better or cheaper than we can here, given technological changes and other changes to the global economy that have taken place over the years. And just another thing to add is that this was not all a function of trade policy, the so-called hollowing out of the middle class. There were major management mistakes made in the 70s and 80s and other factors that caused the manufacturing sector in the United States in particular to lose share to foreign rivals. And so it's not so simple as just slapping on tariffs and having companies move their production to the United States again.
What does the Trump administration's approach mean for the global economic system that the U.S. has shaped and steered for nearly a century now?
Well, I mean, it is a major reversion to a period which President Trump seems to be fixated on, which is the period from 1870 to 1913, when we had no income tax, relied solely on tariffs and other sorts of taxes for government revenues. And he seems to think that that was the most, one, powerful, and two, most economically prosperous time in U.S. history. Certainly not true. After World War II, the U.S. became the biggest economic and military power in the world. And so it strains credulity to believe that that's a period that we should be looking back to and formulate policy around.
What about inflation concerns? I mean, there are some estimates now that some of this price increase that we might see from the tariffs will start to feed into inflation data within about 6 weeks or so. If you see inflation start to tick up, would that worry you more?
Well, I think the president is well aware that one of the main reasons he was elected, in addition to the open border policy of Biden, was the fact that inflation reached a 40-year high and people weren't happy about that. So again, he's got very smart economic advisors. This is a long-held belief on his part that we have to impose discipline on our trading partners. And my guess is he's going to have to judge at what point he's going to have to change course.
What about from your perspective?
If at all.
I want to know more about your perspective, too, because I'm curious if any of those major manufacturers in Wisconsin that you have headquartered there, right, like Kohler and Harley-Davidson and others, manufacturing is such a driver of the Wisconsin economy. Are there any concerns there about the impact and what they'll have to face in terms of this short-term pain that the president's mentioned?
Yeah, there are all kinds of concerns. And again, I view myself as a free but fair trader. And again, we have been treated fairly. Exactly how do you address that problem? That's the $64,000 question here. But no, I'm monitoring the situation. We're meeting with people, and I'll be providing that input to the administration.
So can you tell us more about what those manufacturer leaders are telling you? I mean, I know you said you'll monitor it, but they have to have some sort of calculation or sense of how long they're willing to bear or how much pain they can bear moving forward.
Well, each business is different. To what extent are they importing components? What is their exposure in terms of export markets? So every situation is completely different. But there's no doubt about it. When you slap tariffs on imported goods and people are using imported components to manufacture and then try and export, that's going to make you less competitive overseas. It'll drive up costs. Listen, when prices rise, demand falls. That could dampen our economy as well. So again, this is a bold but risky action the president has taken. I, for one, hope he is correct. I wanted him to succeed. I wanted the American consumer to succeed. I want Wisconsin manufacturers and farmers to succeed.
To understand these tariffs and their potential impact, Amna Nawaz was joined by Robin Farzad, economic analyst and host of Full Disclosure.
So the president held up that chart that we saw that was handed out to journalists as well. It listed all the tariffs that have been imposed on the U.S. by each country and then the tariff that the U.S. would levy in response. What stood out to you about this when it comes to the president's approach to these tariffs?
I'm reminded of a tableau. It was Bill Clinton, President Bill Clinton, I believe in 1993, signing NAFTA. And he was surrounded by Bob Dole, Al Gore, I think George Bush Sr. There was so much unanimity over this new world order. And we were approaching, the other China entering the World Trade Organization and the gains from trade that used to be something that, a moderate Democrat and left-wingers and right-wingers could nominally agree on. And here you have Trump really with gusto shattering that idea of new world economic order that's been building for the past 40 years. And he did it in one fell swoop. So there's no real playbook for this. We could look back to the Depression and this Hawley-Smoot tariff and various other things that happened, but we've never had anything just line up in one day, just in staccato fashion like this. And I'd be very curious to see what the reaction is from finance ministers across the planet and multinationals over the coming week.
Do you get a sense from what we know so far about what industries could be hardest hit and also what consumers should anticipate?
Well, look at cars already, right? I mean, everybody has been anticipating something coming down the pike. We've already seen, as you and I have discussed before, significant inflation through the pandemic in car prices, what $40,000 or $50,000 can tell you. And so much of this is perception and self-fulfilling prophecy. If you're a car dealership or a chain of dealerships and you have only so many things on the lot and various things on a CSX, rail car and other things on tankers coming over, you're going to covet that supply. And there are going to be many people that are afraid and maybe want to pull forward a car purchase. Again, what is an American car? What is a Japanese car? Many great Subarus are made in Indiana, right? Volkswagen, Mercedes, Toyota, they have plants here in the United States. There'll be a tremendous amount of confusion, and it might be like kind of buy first, ask questions later.
So that baseline 10% tariff goes into effect pretty soon, midnight on April the 5th. The other additional retaliatory tariffs go into effect about a week from now. It's a pretty short timeline. What does this mean for the countries and the companies impacted here in terms of what they can do to get ready?
Well, a little bit nefariously, it provides some cloud cover to companies who want to hike prices. We saw that, they called it greedflation disdainfully during the pandemic. But if you're in there and saying, well, we're more uncertain about our supply chain than we were last week, so we have an interest with our shareholders to hike the price. I mean, any car dealership, if you're an American car manufacturer, you can hike prices in reaction to the expected hike. And indeed, the president himself said, let them hike. Let the big three hike. And you saw the head of the AFL-CIO said, it's not so bad if he hikes. So I'm worried about that echo chamber, that reaction. But it's going to hit places like pharmaceuticals, shampoos, everyday products, certain produce items that you took for granted, or textile items and towels. It's not easy to just turn around and reshore these jobs and these factories over the course of 6 months. It takes years.
We saw the president also mention in his remarks that his policies are bringing down inflation. We should point out, in fact, that inflation has picked up in the first few weeks of the Trump administration. But when you look at the tariffs and as they go into effect, what could be the impact on inflation ahead?
Why wouldn't it add to inflation? I don't understand. It could become deflationary if everybody panics and stops spending and the Fed's like, okay, we got rid of inflation, but that's a pretty Luddite move. I mean, it's a roundabout way of destroying the economy. There are easier ways of destroying the economy and getting interest rates down. So that could arrest inflation, but I've never seen that playbook before.
There's also the underlying argument by the Trump administration here that there could be short-term pain, but this is for long-term gain, that this will spur domestic manufacturing in the United States. Have you seen evidence of that anywhere? Could it have that impact?
We did see, since even look at all the companies that have onshored here, especially in auto manufacturing. I'm not convinced that in lower value-added things such as textiles, there used to be towel towns, there used to be sofa towns in North Carolina. It is brutally hard to bring those things back. When you source the fiber and the labor and the railroad tracks that have been left abandoned for several years. You go down the eastern seaboard and see these abandoned facilities. It's not like you can just light them up over the course of 2 weeks. I mean, this is a play that takes decades.
Robin Farzad, host of Public Radio's Full Disclosure. Thank you so much for being here. Great to have you here in person.
My pleasure. Thank you.
The impacts of the tariffs were felt almost immediately after they were announced. The markets this week closed out their worst quarter in 2.5 years, and some businesses are warning that tariffs could hurt their bottom lines. Economics correspondent Paul Salman breaks down the biggest questions about whether tariffs will help or hurt American manufacturing.
This is the beginning of Liberation Day in America.
So President Trump proclaimed in the Oval Office last week when adding 25% tariffs on U.S. auto imports.
And on Wednesday, it's promised there will be more still.
We're going to charge countries for doing business in our country and taking our jobs, taking our wealth, taking a lot of things that they've been taking over the years. They've taken so much out of our country, friend and foe, and frankly, friend has been oftentimes much worse than foe.
And thus, says Mark DePlacido, a policy advisor at pro-Trump think tank American Compass,
we need a transformational change in our economy. And I think the administration is pursuing that.
Part of that change, creating supply chains in America for Americans.
We shouldn't have supply chains. We should have them all in the United States. We have the companies to do it.
But the main theme is tariffs. The president and his team have cited very different reasons for imposing them.
They've allowed fentanyl to come into our country at levels never seen before.
This is retaliatory to a certain extent. Millions of people flowed into our country through Mexico and Canada, and we're not going to allow that.
This is going to be what pays down to $36 trillion in debt and all the other things.
But the dominant case has been that tariffs will re-industrialize America. What exactly the administration will do on Liberation Day, don't know yet. But the argument is, says DePlacido,
for 30 years, we basically allowed other countries to distort their market, to subsidize their own markets at the expense of our market and keep our goods out.
And then, on what would be a level playing field, firms operating in the U.S. will, and I don't mean this snarkily, make American manufacturing great again.
When companies realize the incentives have changed, that they're going to have to factor in tariffs for imports, and they're not going to be able to just, import cheap labor also from other countries under the president's policies. These companies are going to be incentivized to invest in the education and training that our population needs to be successful.
And become more productive. Predictably, I asked a number of economists for a critique.
In theory, it could work.
That's University of London trade economist Ha-Joon Chang in the UK. But he says,
it is going to take a lot of time, and you don't have that time. You have run down the industrial base over the last 4 decades. It cannot be built up in 2 years, or whatever tariff policies that you have. In the meantime, things will be very expensive, especially if you are putting tariffs on the main trading partners like Mexico and Canada. And can people tolerate any more inflation?
But if enough Americans think inflation is a price worth paying for a rebuilt industrial base and foreign firms relocate in the U.S.,
yes, people think that, but the trouble is that it's not just the factories. If you really want these factories to be productive, you need workers with the right skills. You need infrastructure that is needed for that particular industry. You even need universities around it to do research in whatever the firm is producing.
Back across the pond at the Harvard Business School, Professor Willy Shih agrees.
Let's say you wanted offshore production from the U.S. to China. You had to set up a new factory. You had to hire the workforce. You had to train the workforce. You had to bring in suppliers. You had to set up your logistics. And what paid for that was you got lower cost of product. That's going from a high-cost country to a low-cost country. Now, if you want to bring stuff from a low-cost country to a high-cost country, and you have to set up a factory, and you have to hire the workforce, and you have to train the workforce and bring in your suppliers, what's going to pay for it? Your product cost is going to be higher.
And there's another major hurdle, say Shih and others, uncertainty, as President Trump keeps changing what he threatens.
Because with uncertainty, you can't plan. Think about football, right? Business is conducted on a playing field where there are rules defined by the government and others. Imagine if the rules changed every 5 minutes. It's like, how would you play that game?
Our last critic, Robert Zoellick, U.S. Trade Representative under George W. Bush, economic advisor under Bush 1. He spent his career negotiating tariff reductions. But in today's economic environment, mightn't there be advantages if America erects barriers and more nearly goes it alone?
We've got some advantages, but also then you have to ask, if we go it alone, what happens to all the farm production that we make in the United States that we sell abroad? And in the case of North America, we're far more efficient because of the Mexican, Canadian, American supply chains that produce cars. So if you put the types of tariffs that President Trump was talking about, you'll increase the price of cars by $3,000 to $12,000 are the estimates. Do people want to pay that? Well, no, but I mean, I've talked to a number of people who say they'll bring their plants here to America. That's the point, to create more jobs, more work here in America. So the problem with Trump's approach is it combines incoherence and protectionism. And you have to look at both parts. So the protectionism will add costs, and then you also have the retaliation. We tried this in the 1930s. We raised tariffs to an average of 59%, and other people hit back. We had a trade surplus, but we also had unemployment at 25%. So it's a policy that reverses 70 years of America's international economic leadership.
Okay, the crux of the critiques, higher prices at home, maybe even a recession, plus policy uncertainty, while waiting for America to reindustrialize, who knows by when, if ever. Mark de Placido's response?
We have a new president. It's only been 2 months. He's promised to make the most substantial changes to our economy in decades. And that's going to come with some disruption, as he's indicated, and it's going to come with some uncertainty. But I think by the end of the spring, people are going to have a very clear idea. What the president has been consistent on is saying, if you manufacture in America, if you produce in America, you are not going to have to pay these tariffs.
And if we can provide enough homegrown workers, expertise, capital, we recapture our manufacturing edge. But more manufacturing jobs when even China is losing them to increased automation? Yes, says de Placido, because U.S. firms will become more productive. And that, he says, is what the administration is betting on. For the PBS NewsHour, Paul Salman.
President Trump's sweeping tariffs will ripple far beyond Wall Street. One industry readying for those impacts, agriculture. I traveled to Red State, Nebraska to meet one farmer preparing for uncertainty.
Last year, 37% of Nebraska's state budget came from the federal government. That includes Medicaid, research grants, roads, and bridges. But one of the biggest areas watching Trump's policies is the ag economy.
When you're looking at your margins and your rate of return, I mean, you're squeezing pennies.
Outside Nebraska's other big city, Omaha, Scott Thompson's farm roots stretch back over 3 generations. He says farm families like his are used to a bumpy financial ride. Was there a point you thought about getting out?
Oh, yeah. Usually 5 days in the summer and 5 days in the winter.
The tech has evolved, but not the seasons. Every spring, he fertilizes his fields that will grow corn and soy. That produce and the cattle he raises put the family farm and much of the state at the center of the president's trade war.
I'm going to be much more lenient with regard to the tariffs that you'll see on April 2nd. I'm going to be much more lenient than they were with us.
Trump has already sparked a tariff battle with China, possibly hurting farmers' demand, and he's threatened Mexico and Canada, which could further spike key supply prices, like for fertilizer. But Scott hasn't seen that yet.
So far, as bad as it's made to be sound, it really hasn't been a sledgehammer because he's backed off our Mexico-Canada trade tariffs 2 times now.
This year, he's locked in a strong crop insurance rate, allowing him to bank on income from his fields even if the market turns. He likes what Trump and Elon Musk are doing to cut government and shift the trade balance. He also knows there's a risk to farmers. But you're hopeful.
Absolutely. Yeah.
Why is that?
We've already been through this once. So we went through it in 2020, and it was a hand grenade that went off that time, and the prices fell out of bed. Made it through. We were subsidized by the government. Basically, the loss of what they thought the tariffs impacted the price, and it ended up being a really profitable year for farmers.
Thanks for watching this episode of PBS News Weekly. Up next, the PBS NewsHour.